You have this note arguing that a breakup could be good for stocks, but is it kind of a weird conundrum where the threat of a breakup is actually bad, even though a breakup itself could be good?
Right. So first of all, on the possibility of breakup, we don't hold your breath. I think it may take years really for us to have clear visibility into that. That's number one, because the issue is very complicated, both on a domestic level and an international global level. But also from a pure financial standpoint, we think a breakup would indeed unleash accretive shareholder or be accretive to shareholder value over time. One, because operationally, you are going to allow these businesses, which are already at very much at scale. I mean, if you take Facebook, it's 4 or 5 different businesses that already have over 1 billion users. So these businesses, even if broken up, they'll be at scale, but they'll be able to compete and be more nimble, get their own financing, etc., and will not be in the crosshairs of the regulators. And then if you look at just a pure sum of the parts analysis, looking at comps, looking at where these things should trade, really, and that's what the note that we published this morning was about, making some relatively conservative assumptions about what these businesses should be worth separately. In the case of Facebook, for instance, you look at somewhere between 25 and 35% upside to current shares over the next 12 to 18 months, call it. So yes, we think a breakup is going to take time, may not happen ultimately, but if it does, it will still be positive for these stocks.
But Mark, that's the trouble, isn't it? Is that you could end up with one type of regulation that restricts the business practices. That would be bad, and maybe a breakup is the least likely scenario, but that would be good. How's an investor to parse it?
Let me try 2 points on you, and I largely agree with Youssef on this. I think he nailed it. The 2 points are there assets within these companies that investors would love to get their hands on if they could buy and sell them independently or individually? Absolutely. Investor interest in an asset like a spinning off of AWS would be enormous. Investor interest in the spinning off of an Instagram would be enormous. I'm not sure. Yeah, an investor interest in the spinning off of YouTube would be enormous too. So from that perspective, it's interesting. Now, there's already been an impact of regulation. It's pre-regulation impact, and that's the inability of these companies to do large-scale acquisitions. I think these kind of acquisitions are off the table. They probably have been for the last 2 years. It's probably one of the reasons why Google didn't attempt to buy Twitter. They knew that kind of the regulatory pressures they would face if they even attempted to think about an acquisition like that. So I think that's one thing. That's the dog that isn't barking, or whatever the expression is. The ability of these companies to do large strategic acquisitions is off the table, and they are having increased expenses because of regulation.